This is your Wall Street wake-up call. Wells Fargo CEO John Stumpf retiring amid fallout from its fake bank account scandal. Here with reaction is Michael Ingram, a market strategist with BGC Partners in London. So Michael, it's always great to see you. This is quite common in a scandal like this for the CEO to leave, although reports say he was not fired.
Yeah, exactly, and the board is at pains to say that he wasn't even nudged out. This is seemed to be John Stumpf's own decision, though, of course, not without a certain amount of pressure being applied for him, not least of it by Elizabeth Warren. So it's interesting to see the initial market reaction. They gave the elevation of Tim Sloan, the former COO, to the top job a conditional thumbs up, but that didn't last very long, and of course, given the sort of cultural issues, perhaps a certain level of board dysfunction, which recent events have highlighted at the bank, one has to ask the question whether or not a 29-year insider of the bank is really the person to set things straight. You can be pretty sure that there are various people who are going to keep the pressure up on the bank. I would imagine that despite Mr. Stumpf's exit, that it will be raised again on their third quarter earnings call tomorrow, and I'm pretty sure that Wells Fargo is going to be in the headlines in the weeks and months to come, for good or ill.
And that was going to be my next question, which is Tim Sloan going to be enough to sort of calm the public outrage? Because Sloan was very close to Stumpf, so you could argue that he was sort of in that cultural group in terms of opening up these fake accounts.
Yeah, absolutely. I mean, he was only CEO from November last year, so he only had formal oversight of the retail banking unit, where most of the problems seem to have occurred for 11 months. But as you say, quite rightly, Scott, I mean, he has had a seat at the top table for a very, very long time. He was seen as a natural successor to John Stumpf. And now he's the man who's supposedly going to put things right. And I have my doubts, and it's looking as though investors may have their doubts too. And I'm guessing that a lot of column inches are going to be expended writing on this very subject very, very shortly.
All right, now what about its stock? It's been beaten up over the past 6 weeks or so. Nothing too significant, but still a pretty nice decline. Does it matter what the earnings are tomorrow?
I think it probably does to an extent. I mean, certainly the market's going to be looking at the volume margin mix. We're expecting a bit of pressure on margins. I mean, Wells Fargo is one of these banks which is rather more asset sensitive than perhaps some others, so lower for longer really hurts them. We're likely to see a bit of softness in commercial and industrial lending, maybe offset by better volume growth in mortgages. But I guess, of course, the focus is always on these earnings calls is going to be, where are we going to go going forward? Are we going to have any more bad news coming out from the various probes and regulators? What's their view on the industry fundamentals, energy exposure, things like that? So I mean, I think that the market isn't massively sensitive to what are, at the end of the day, historic numbers, but they're going to be particularly sensitive to what the trend is going to be. And if you look at the broad sweep of Wells Fargo's earnings, they've been pretty stagnant for quite some time.
All right, Michael Ingram from BGC Partners in London. Michael, thanks for joining us.
Pleasure as always, Scott.
I'm Scott Gamm, and you're watching The Street.